Every so often, I hear clients referring to investing in the stock market as a form of gambling. They compare the risk of losing the principal the same when investing in stocks or stock funds as to putting money on the Pittsburgh Steelers game or buying a Powerball ticket. Now, I imagine that a lot of financial advisors have different opinions on this, but allow me to share my opinion. Unlike saving in a bank account, investing in the stock market involves risk. And the one that most comes to mind is the risk of losing principal. This is what keeps folks investing in stocks and stock funds, the fear of losing principal. However, they relate it to gambling, which my take is the risk is different. You see, when investing, an investor will be purchasing at a time that they feel is appropriate and timely. And to profit, you have to sell at a time that is appropriate and timely. In both cases, you are in control of the purchase and the sale, which means you have to make two good decisions to profit from your investment. Now, that is a discussion for another lesson. But the point that I'm making here is that you are in control of what you buy and when you buy, and when you are in control of when you sell. That's investing. On the other hand, gambling is when you are not in control. For example, when that wheel spins and lands on a certain number, you either win or lose. When that lottery number goes off at 7 o'clock at night, at exactly 7:01, you know if you won or lost. When the horse crosses the finish line, or when the dice is rolled, this is gambling, and you know you won or lost in all of those situations. You are not in control of whether you make money or not. I'm not saying there isn't risk to losing your principal when investing in the stock market or in stock funds or individual stocks. You certainly can lose money. But it's not fair, at least I don't think, to say that investing in the stock market is gambling. It's investing.